Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, welcome to the November 29th edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This episode, as always, is produced by Paige Driscoll with the help of the EverAg Insights team. It is currently cold, frigid cold here in Chicago. What better way to warm up than with the latest from the NDPSR report? Let's start with butter this week. This butter number, 277.05. That represents a plus 15 to the CME 1 week average of 262.25. So the CME was down 18 and not a whole lot of that break got in. Here on the NDPSR, just down a little over 8. Prices slow to translate from the CME to the NDPSR. We traded 15 loads on the CME last week, and that volume was at a lower level. So you would think that values would be pulled down rather quickly, but just not the case. Volume on the NDPSR, a little bit north of 2.8 million pounds, well below our expected 3.5 million. So the story in butter, higher than expected basis on lower than expected volume. In cheese, this block number, 170.53. That represents a plus 5 to the CME 1 week average of 165.35. The CME was down 4 week to week. Here, the NDPSR close to that, down almost 4.5 to almost 5. Prices moving in tango with the prices at the CME. The block, however, able to maintain that 5-cent positive basis, which is well above our expected 2 to 3 cent positive basis. So the manufacturer was able to call a good sales price and was able to do it on higher than expected volume. So almost 450,000 pounds above our expected 12.5 million pound level. And this marks the second week in a row that the block volume has surpassed the 12.5 million pound threshold. And actually, if you look back, 3 of the last 4, we've had higher than expected volume. So the buyers have returned to the block, and that could explain this higher than expected basis. Certainly a win for the manufacturer in blocks. In barrels, 168.38. That's a plus 5 to the 2 week average of 163.10. Plus 5 is pretty good basis, and this is on the precipice of significantly lower levels at the CME. Next week, we have a big break in the barrels when calculating our weekly averages as prices at the CME move significantly lower. I would expect that on that break, the basis moves even higher still than this plus 5 that we achieved this week. Plus 5, of course, is right in the middle of our expected 4 to 6 cent positive basis. And on that normal basis, volume falling a little bit short of our expected 13.5 million pounds, coming in at 12.9. So we missed the benchmark on volume a little bit. Basis coming in as expected. That's what 12 loads traded on the CME last week. So we had pretty good volume at that low level, and the barrel was still able to carry expected basis. Again, I'd have to call it for a win in the barrel and the block. Up next is whey, 40.42. That represents a plus 1 to the CME 1 week average of 39.10. And you'll notice that the manufacturer was able to call almost a 2 cent premium over that November 11th NDPSR value of 38.28. So the manufacturer was able to call a good price. However, end users, it looked like they turned up their nose a little bit with volume here on the NDPSR just falling short of the 4 million pound level and well below our expected 4.5 million. We only traded 2 loads at the CME last week. So typically we have big volume on the CME. That was not the case last week. That lack of volume on the CME showing up here on the NDPSR, as I said, falling well short of expected levels. This 40.42 is a really nice price. Next week, the CME benchmark will be the high week. I expect that this is likely the high week on the NDPSR. We'll see what they have in store for us in weeks to come. Lastly, non-fat, 120.74. That represents a plus 2 to the CME 1 week average of 118.50. Boy, that's big basis at the high end of the recent range. Demand must be really good. Oh, wait a minute. Volume only 7.8 million pounds. So they took the price north of 120 and the manufacturer was able to sell a few loads up there, but falling some 12 million pounds short of our expected level. 7.8 is a extremely disappointing volume. I actually can't remember a weekly volume being that low. So a nice price on lower than expected volume in non-fat. So this is the final week for the November 4-week pricing cycle. And prices came in, at least in class 3, a little bit higher than expected. 17.15 is our November final, with class 4 coming in all the way up at 20.87. If you carry current CME equivalents out through the remainder of the 5-week December pricing cycle, currently getting December class 3 at 15.90 and December class 4 all the way up at 19.10. Thanks so much to Paige for producing this episode and the entire EverAg Insights team. Until next week, bye-bye.